Hey everyone and welcome. In today's video, I'm going to give you a comprehensive overview of the world's most popular decentralized cryptocurrency exchange, which is Uniswap. So just for your information, in the past 24 hours alone, Uniswap did over $1 billion worth of cryptocurrency transactions and had 46,000 active users, which is 10 times more than its nearest competitor. So in today's video, I'm going to show you why Uniswap is so popular and some of the features that it offers that you can use in your own cryptocurrency trading strategy. Hey everyone and welcome. I am Robert with Altcoin Buzz, and in today's video we are taking an in-depth look at all the features that Uniswap has available for you. Now before we start, I want to point out that there are two main features. The first of these is a decentralized exchange, which allows you to swap cryptocurrency without having to do KYC or go through a broker or anything like that. And then the second part is being able to earn trading fees by providing your cryptocurrency to liquidity pools. We'll cover both of these, but I want to start with the decentralized exchange. The decentralized exchange with Uniswap is incredibly easy to use. And when I first got started in trading cryptocurrency, it's the exchange that I started with because it was so easy. And I hope you find in this tutorial that it's easy for you as well. So when you go to app.uniswap.org and go to the swap function, you'll see a very simplistic screen that has from and to. So the first thing that we need to do to make a trade is we need to connect our wallet. I'm going to be using MetaMask, and I will simply log into my wallet. Now, when I log into my wallet, Uniswap is automatically going to detect what assets I have in my wallet. So it can detect that I have Ether in my wallet, and I'm just simply going to enter the amount of ETH that I want to trade, and then I can select what token that I want. So let's suppose that I want Uniswap. I can go to Uniswap and it's going to tell me if I'm giving up 0.2 ETH, this is the amount of Uniswap that I'm going to get. Now, you might be wondering and you might say, well, why are there only a few different assets? The reason for that is because right now I'm operating on the test network just so I don't have to spend any gas fees. However, if I connect using my main account, what I'll show you is that there are a vast number of tokens available for you. So Uniswap has a huge selection of tokens: Ether, BAT, Uni, Comp, LRC, Aave. Almost any ERC20 token that you're looking for, you will be able to find on Uniswap. So that's one of the things that I really like, is that it's very comprehensive, right? If there's a token you're looking for, you're more than likely going to be able to find it. But then again, just for the purposes of this video, so we don't have to spend a whole lot on gas fees, we're going to jump back here to the test network so I can actually go through a transaction and show you how it works. So I'm going to go from 0.1 ETH, and let's suppose that the token that I want is Uni. I'm going to click on that, and it's already going to tell me what amount I can expect to be getting. So from 0.1 Uni, I will get 0.1 ETH, I will get about 3.4 Uni, and then it gives us a couple little advisory notices here at the bottom. It says the minimum received. Your transaction will revert if there is a large unfavorable price movement before it's confirmed. So let's suppose that something happens with trading, there's a loss of liquidity or the price changes and it's going to drop down to only giving me 1 Uni, right? The trade isn't going to go through because it's protecting me from those sudden price swings. Now, price impact is the difference between the market price and the estimated price due to trade size. So I'm making a relatively small trade here, so it's not going to throw off the price that much. And then this is the liquidity provider for E. So we'll get into more of that in the next section of the video, but just know that Uniswap takes a 0.3% fee on every trade that you make. So all we have to do is click swap, and we are going to confirm the swap and the transaction will process. And again, remember that this is on the test network, so we're going to go ahead and, just since it's on the test network, we can set a pretty high gas price because we are not going to actually have to pay that. It's all test cryptocurrency. We will click confirm and we can view the transaction on Etherscan. Now, if you were doing this on the main net, your screen would look a little bit different here. Since we're doing it on the test network, it's going to look a little bit different, but just know that when you do this, you're going to be able to see your pending transaction. So a lot of times people start to get nervous if they don't see their transaction immediately happening, but don't worry, you can see it. It's on that block explorer. It will let us know when everything is confirmed. Okay, so what we can see here is that the transaction has indeed been confirmed. And then if we go back to Uniswap, what we will see is that that amount has automatically been deposited in our wallet. So let's go ahead and add Uniswap as a token. And it's going to show that we do indeed have that 3.411 uni in our wallet. Now, that's one thing that I do like about decentralized exchanges in general, is that when you make a trade, it automatically goes to your wallet. So if you'll notice, we didn't have to deposit funds to Uniswap and then withdraw funds. That's because Uniswap is a decentralized exchange. So there's no custody of the funds. The funds go directly from our wallet. They interact with the protocol, and then we get exactly back what we want. We don't have to go through deposit. We don't have to go through withdrawal. We don't have to go through KYC. And then if I go back here, we can see that I now have Uni that is showing in my wallet. So making a trade on Uniswap is incredibly simple. So that's really all there is to making a trade. In the next portion of the video, I'm going to get into how you can earn fees by being a liquidity provider and making those trades happen. Alrighty, so now that we've shown you how to do a basic decentralized trade through Uniswap, what I want to show you is how to earn liquidity fees through being a liquidity provider. Now, when you are a liquidity provider, what you're essentially doing is providing cryptocurrency funds so that people can trade between two assets. So to do this, what we need to do is log in, and obviously our wallet is still connected from making our decentralized trade. What we're going to simply do is click add liquidity, and we can choose what liquidity pool we want to add liquidity to. So I could go between Uniswap and DAI. I could go between basic attention token and wrapped Ethereum, right? Whatever liquidity pools are available on Uniswap, I could contribute to those pools. Or if I don't see a pool that I like, I could create my own pool. But just for purposes of this video, we're simply going to contribute to the ETH and Uni pool, since those are the two assets that we have. And when you contribute to these pools, you have to contribute assets that are in an equal amount of value. So what you'll see is that if I put in 0.01 ETH, it's going to tell me how much Uni I have to put in. If I put in 0.05 ETH, it's going to calculate how much Uni that I have to put in. So one thing that I do want to point out is the share of the pool. So right now we're at 0.04%. That means of all the trading fees, everything in the pool, we're going to get 0.04%. So all we have to do is simply click approve Uni, and the first time we do this transaction, we're going to have to basically unlock the asset. So we are going to confirm that. And again, it's going to be visible on an Ethereum block explorer, or if we go into the activity tab of our MetaMask, we're going to see that this transaction is pending. If we wanted to, we could view it on Etherscan just so that we see it is indeed processing. Now, because it's on the test network, it's not going to give us the full details and estimated confirmation time like it would if we were on the main network. But if you were on the main network, you would see that your transaction is pending. It would give you an estimated time till confirmation. But just right now, while we're waiting, we'll go back here. We can see that the transaction has indeed been approved. Once we approve the transaction, we will have to go ahead and actually go through with the supply function. So we're going to confirm that we're depositing 0.05 ETH, 1.70 Uni. It's going to tell us the rates between the two, the share of the pool. And again, we will have to do another transaction. Now, this is something that I want to be very clear about, especially right now where ETH gas fees can be going into $18, $20 for a single transaction. You need to understand that you're going to have to make one transaction to unlock your assets, one to deposit the funds, and then when you want to withdraw your funds, you're going to have to make another transaction. So at least right now, when ETH gas fees are $20, this isn't something you want to be doing if you're putting $5 worth of cryptocurrency into a pool, right? This is something that you really need to give some thought to, especially if you're going to be doing these small amounts, right? The more crypto you're putting into the pool, if you're putting $10,000 or something, a $20 fee isn't as much. But if you're only putting in $20, $30, you are going to have to make 100% return on your assets just to cover your fees. So obviously not telling you what to do or what not to do, but that's just something to keep in mind. So we have went ahead and submitted that. Again, it's going to take just a little bit of time to process, and it shows that our transaction has been completed. It's showing as a success on the Coven testnet here on Etherscan. So we'll go back to Uniswap. And now what we can see is that it shows our position in the pool. So it's showing us as having 0.042% of the assets. having 1.7 Uni, having 0.049 ETH. So one of the most important questions that people will have when they're considering lending to these Uniswap liquidity protocols is how much can I make? And that's a valid question, and it's going to depend on a lot of factors such as the price of the assets, the trading fees, the volume, and this is not financial advice by any stretch of the imagination. However, I did want to share one easy to use calculator that can kind of give you a general idea of what to expect, and that is at liquidityfolio.com. And you simply have to register with a username and password. You don't even have to enter your email address. And it will show you different liquidity pools and the expected returns. So let's just take a look here at Uniswap. We have the Ethereum and wrapped Bitcoin pool. We can see the current liquidity. We can see the expected trading fees over the next 30 days. And we can see the Uniswap ROI and the equivalent APR. So this is where I need to do a little bit of explaining. You'll see that there's really two forms of return. The first of these is the equivalent APR. That's the annual percentage rate, right? That's kind of when you think of what's the return on my investment, that's it right there. However, you'll also notice that there is a Uniswap ROI. And this is the net difference between simply holding the assets and contributing to the Uniswap liquidity protocol. And there's a couple differences between contributing to a liquidity protocol and simply holding the asset. So if I have Bitcoin and Ethereum in my wallet, and the price of those go up, whatever the price increase is, that's how much I will make. However, when I do liquidity providing on Uniswap, not only do I get that increase in price, but I also get those trading fees that are going to be factored into my Uniswap ROI. So that's on the positive side. However, there's also a negative side, something known as impermanent loss. And impermanent loss is kind of a difficult topic to explain. However, just know that if you provide two liquidity pairs and the price diverges between them, you can actually do slightly worse off than if you simply would have held the assets in your wallet. So what you're hoping is that any price change between the underlying assets will be more than offset by those trading fees. With this ETH to USDC trading pool, there is a predicted impermanent loss. However, you'll notice that the fees more than overcompensate for this. So again, it's up to you to make your own decisions whether you want to hold, whether you want to provide liquidity, but this calculator does give you at least a good starting point so you can see the differences between simply holding, the differences between contributing to those liquidity pools, earning those trading fees, even at the risk of a slight degree of impermanent loss. So before I show you how to withdraw your funds from a pool, I just want to show you really quick this dashboard here where you can find your account analytics and accrued fees. You simply click on that and it's going to bring up a dashboard that shows you how much you've made through your trading pools, how much you've made through your fees. So that's something that's really cool, and it's a great thing. Obviously, it's not going to help us so much being on the test network, but if we were on mainnet, it would show us all of that information here. So what I'm going to do is to remove these funds from the pool, I'm simply going to go to app.uniswap.org. I'm going to click on manage, and then I'm going to remove this liquidity. We're going to remove 100% of liquidity. We're going to approve that transaction, sign that transaction, and then remove that to our wallet. Obviously, as I said, this is going to incur a gas fee. Not a big deal since we're on the test net, but again, keep in mind, if you're doing this on mainnet, I would have spent about $60 worth of fees just doing these simple transactions right here. So overall, kind of wrapping everything up with Uniswap. Uniswap is the world's most popular decentralized exchange, and it is that way for a reason. It has an incredibly simple and easy to use decentralized exchange feature that lets you trade for basically any ERC20 token. It has very low trading fees at 0.3%, and it also gives you the opportunity to earn as a liquidity provider by contributing to those trading pools and earning 0.3% of all the trading fees that go through your pool. So in general, I hope you found the video useful. Thanks for watching. If you have any other suggestions, things you want me to cover, be sure to leave it in the comments below, and I will see you next time.